What's going on, traders? Welcome back to my channel, Living Bullish with Colton. Today, we are going to focus on Wyckoff structure inside of the major US stock indexes. Now, on this channel, we're normally going over institutional order flow on a technical analysis side. And again, like I've stated in a lot of previous videos, it doesn't matter what market we're looking at, what asset we're looking at, we can see this institutional order flow happening over and over and over again. So if you've been here before, thank you for coming back to this video. Please go ahead and smash that like button. If you're new to the channel, hopefully by the end of this video, I can get a nice subscribe push on your end and you could stay updated on future videos that we got. But for now, I'm going to go ahead and minimize myself a little bit and we're going to get right into the charts because we're going to make this nice, super sweet and short. So we're going to have three main focuses inside of this video here. Number one is going to be the S&P 500 index, which is a measurement of the top 500 companies publicly traded in the US. Number two is going to be the Dow Jones, which is a measurement of the top 30 companies that are traded. And then number three is going to be the NASDAQ 100, which is a measurement of the top 100 tech companies that are traded publicly here in the US. So as you can see over here, I already have these on my watch list. Now, I use the CFD for looking at the S&P 500 because this is the one that is closely related to the price on my broker that I use on MetaTrader 4. If you were to look at the normal S&P 500, right, you're going to have skips just like the regular stock market. You could also look at the futures. This one won't have as many skips, but the futures contracts are a little bit different than the CFD ones that we look at. So you're going to want to go ahead and type in and find which one, which price relates best to your broker. But overall, when I'm trading them on my broker, it shows up as the SPX USD. It shows up as US 30. And this will be most for you guys that are familiar with, Forex going over to indice trading, and then the NAS 100. So this is how they show up on most brokers when you link them on MetaTrader 4. So that's what I use, right? As you can see over here, US SP 500 CFD. For US 30, I use the currency.com. And then for NAS 100, I actually use Owanda. So different for all of them, but this is what closely relates price to me. Now, again, in this video, I'm going to go over Wyckoff structure and how this relates to these index markets and how, again, the same institutional order flow that we learned for Forex and the same institutional order flow that happens in crypto is happening on the stock markets, not just today, not just yesterday, but pretty much the entire time that these have been out, right? Wyckoff has been around for, I don't know the exact date, but it's been around for a long time, right? Since like the 1930, 40, 50s, one of the fathers of technical analysis. So I'm going to go ahead and show you guys a couple of examples on how, we've been, you would have been able to take advantage of some trades here this week. And we're pretty much going to go right into it. So obviously we can see on a higher time frame, right? We've been hitting all-time highs for all these stock indexes. So obviously we are in a big uptrend ding market. Now, again, if you're not familiar with Wyckoff structure, right, we're pretty much looking for those equal highs, those equal lows to be made in the market. And then what do we want to do? We want to see the institutions go ahead and purge those highs because this is the majority of people getting in their entries. Once they purge the highs, they'll go trade back below, make a new break of structure low. And then once they come up and test, that's where they get in their mitigation play. That's where we go ahead and end ourselves and trade down. And then the same thing happens to the downside, right? Nice W formation, trade below it, trade above, come back and test, and we're going to go ahead and see the market continue up. So we'll just identify a couple things here on the 4-hour and then go into the hour and 15-minute chart to go ahead and just identify more opportunities, more intraday stuff that you guys could have found for yourself. So again, you can see a nice distribution here. You can see another nice distribution here. Now, again, the market has been continuously moving up, but I'm going to show a couple sell side opportunities that have happened. So again, right, you have some equal money going over those 8 hours. You have this last up candle, right, that purged that liquidity. We traded back down very, very quickly below all of these other lows. What happens is we come trade back up into the open of that candle, right? This is where the institutions, they wanted to sell off. They knew they had to sell off, but they didn't want to do it with the majority of people. So what did they do? They bought to sold. And then what they got to do, they got to come back and mitigate or go ahead and break even on those initial buy positions to go ahead and enter their second round of sell positions to go ahead and take the market back to the downside. Now, even though they didn't make a lower low here, this is still that smaller time frame institutional order flow structure to the downside. And then hopefully you can see that same exact pattern happening over here as I go ahead and blow this up a little bit, right? You have kind of those, 16 hours of sideways moving market. You have that last up candle, right? We traded down below near the lows, equaling out that liquidity here. So then we had a nice pool of money hanging out right here. And then what did they do? They come back and test around the open in 50% of that last up candle. That's our mitigation play. And they went ahead and continued the market, right? Back down to the downside. So overall, gave us really nice distribution structures showing off there. Again, you can just go look at that on smaller time frames. Look how beautiful this one is on the hour. This was a really clean play back on the 11th of February, right? Look at this beautiful up candle, trade lower, consolidate, right? They're creating all those retail buyers, they're creating all those retail sellers. What do? They run the market above those sellers, mitigate here, trade back lower, go from there. And you can even see that institutional order flow back to the upside. So going back into this week, the market opened up right here on the 14th. We went ahead and traded up. We consolidated for all of London. We went ahead and saw that high side distribution happen, fell off on Monday. Tuesday hung out again. So after this consolidation on Tuesday, right, what are we thinking? We just want to see if we can continue this market to the downside. So I'm going to go ahead and delete this box. Now, I personally didn't take advantage of anything here this week on the S&P because we didn't quite get the same fluent price action that we did on US 30, and I'm going to show that. So as I'm showing here, right, we did have this nice liquidity area, and if you look above this liquidity, we did have a nice imbalance to the upside. So I would have loved to wait for this, right, in that last up candle down move imbalance. So if this would have traded up here near that 39.50 price, this would have been a nice area to maybe throw an entry, stop up over the highs. So we'll go ahead and just grab our short position here, right? Maybe somewhere around the 50%, stops over the highs, whether you use the 6 point stop or the 12 point stop. And then again, you're going to want to go ahead and target, right? Anything down here below these wicks. So anywhere over a 4-to-1 ratio, we would have been looking at here, but we didn't quite get that, right? Asian session just kind of consolidated out and we just continued to trade lower. So the beautiful thing is if you don't have the setup on the S&P, you might have it on the Dow Jones, you might have it on the NASDAQ 100. Now, even though they're not going to mimic each other perfectly, they're going to be pretty similar. So from here, all the higher time frame stuff that we've done is going to be the same thing pretty much on the US 30, right? We had the open, we traded higher, we had our nice distribution to the downside where we created all the money. And then as you can see, we got a little bit closer to the upside on US 30, deeper in the retracement. And this is where some of the setups could have taken. Now, so again, you can see the beautiful manipulation here as well, right? Consolidation area. What did they do? They come trade below all of these lows. They did trade through this last down candle. We initially rejected off for about 50 points, but it ended up coming in trading a little bit lower underneath this liquidity. So it's like, that's the thing, initially you could have been looking at this candle and within this hour chart, I'll show you on a smaller chart, we got initial rejection, but overall they still needed to come trade below this little pool of money because on smaller time frames, there's still another smaller institutional candle hiding out inside of this down candle below this liquidity, right? So I'm going to show you guys all that. Again, the market's very fractal. So this is happening over and over and over again. As you can see, the market traded up higher. And then here, right at that same Asian session, we traded up near that imbalance, didn't quite get there. And you can just see the really nice institutional order flow that was going on here, right? If you were trading maybe off the wick of this last up candle, you had a mitigation play there, again, open of this last up candle, mitigation play there. And then overall, just very nice sell side structure going on. So we'll go down to the 15-minute. I'll explain a little bit more as to what was going on here. Again, as you can see over here, we had right that nice, still deeper than a down candle, lower than this liquidity, even though this was a nice imbalance, right, on a smaller time frame. I'll show you guys what went on here. So let's go ahead and just go to the minute so we can see what kind of small Wyckoff structure happened, right? So as you can see, look, as soon as we initially hit that, what did we reject for? And when you're trading US 30, that is 50 points in profit, which is normally on a point 0.01 is $50. So if you go $50 in profit, normally you're going to go risk free or whatever it may be. So it needed to come back one more time, hit that lower point, and then as you can see, it went ahead and traded higher. Now, this is also, again, this is always happening when it comes to the indexes, and this is probably one of the most key points that I could say in this entire webinar. When you're trading the US stock indexes, they open at 9:30 technically. So even though on this exchange, on the 23.5 exchange rates, because they're open. They open at 6 p.m. and then they close at right around normally right before 5 p.m. So they're not open between 4:45 and 6 p.m. Eastern. But they technically open at 9:30 a.m. Eastern. So from 9:30 to 9:45, you're going to see all this manipulation happening. And then once 9:45 hits is when that actual trend starts to happen. And you guys can see that here. So it's like, and let me go down to the 15, let me go back up to the 15-minute to explain that for you guys. So let that 9:15, right? That 9:30 manipulation happen. Then what happens after 9:30 closes? 9:45 hits. They go trade above the break of structure. What happens? They pull back down into the last points of this down candle, right? This is where you can pull out the Fibonacci retracement, right? We take it from swing low to swing high. And as you can see, they came down and almost got that 61%. Not quite. There was probably smaller imbalance here, and they went ahead and took the market higher. Look where they start rejecting off. Number one is at negative 27. Number two is at negative 67. So again, very fractal market nature. Hope I didn't confuse you guys too much walking through that example there. I know it wasn't the cleanest, but that was definitely something that some people were looking at this week. As it goes for this morning, let's go ahead and see what happened this morning. Not a whole lot that I want to go over here on this. So as we go look at the NASDAQ 100, we'll go see if anything differs on this when it comes to maybe as clean as the plays would have been. I really don't trade the NASDAQ 100. That's why you see it lower on my watch list, but I still use it for reference. So again, you see that same bullish marker, consolidate, hang out, drop lower again, and you see that original action here. Boom, last up candle, trade off, sell down, right? They sell down as they pull back up into this imbalance. What do? Last up candle, sell off, back down below the lows. So again, you're going to want to position yourself swing high to swing low, right? What do? They come trade in that 61 to 79%. Even though they didn't quite get up to that last up candle, that's where you got. They trade lower through that negative 27 and through that zero deviation. And then, pretty much the market rocketed back up. Now, in this webinar, I didn't really go over any like whole levels, half levels stuff when it comes to these indexes and whatnot. This morning, for like scalping purposes, there was a little bit going on around this 31,300 area right here. So right here, I'm on 31,300. This was a really nice, area to be watching. As you can see, even late New York, right? So here's that manipulation, 930, 935, 940 candle. We trade higher. We had to trade a little bit lower, but even if you wait till later New York, you had that last down structure off of 91,300. We trade high, we come back, we mitigate, and ultimately we're going to end the day pretty much back where we had opened the day. So a lot of the time that's happening. So really just a quick Wyckoff explanation here for you guys. Wanted to show you a little bit on the stock indexes. There are other price action studies on my channel that you can go look where I've taken live trades at that 9:45 time and shown you guys what happens through New York session. But for this video, this is what I got. Hope you guys enjoyed. Thanks for being here. Make sure to like and subscribe, and I'll be back with it maybe tomorrow with a price action study. If not, I'll be posting something up on Saturday. So much love, safe trading, and let's get it.